Hey everyone, hope you're having an awesome Saturday and you had a great week. Kind of want to go into what I'm seeing in the markets. Just go and share my screen here. So I recently Nvidia, which is one of the biggest, not one of the biggest, but one of the more popular, more large market cap semiconductor businesses, especially in the US. They do business all over the globe, but they're pretty big deal. So I believe it was the 26th of August, they released their second quarter earnings. And I went over it and they're pretty bad in terms of what I've been saying. The semiconductor industry, whether you go through Nvidia filings or Micron or Intel or whatever other of the big semiconductor producers like AMD, all their quarterly results are pretty bad. So since Nvidia's here specifically, I usually just focus to GAAP because non-GAAP accounting is BS in my opinion. So revenue, you would say, you look here and you would say, oh, revenue is not down that bad. However, in terms of operating expense or cost of producing that revenue, it has increased dramatically. Net income is horrific, down 59% quarter over quarter, down 72% for the year. This is net income. This is the cash the company has available after all liabilities and operating expenses and all that kind of good stuff. Net income has taken just over the year, from the beginning of the year, a 72% haircut for a massive company. That's pretty brutal. That's why you're seeing the layoffs occurring around the tech industry right now. This is reflecting in the fact that GPU prices are declining, which might have something to do with the fact that cryptocurrency is declining, because see how the semiconductor industry is basically linked to everything. So it kind of gives you an indication of where everything else might potentially be heading, because less semiconductors are being sold, less cars are being sold, less computers are being sold, less microwaves are being sold, less washing machines are being sold. You name it, they're in everything. Less phones are being sold. They're in everything in this day and age. So this is pretty bad in terms of looking at their finances, and net income has declined 72% in this year alone. That's pretty brutal. So just go a little further here. So again, you would look at revenue and then you would be like, oh, nice. Revenue is pretty good. However, revenue is just part of the picture. You got to look at the cost of revenue, which has increased. So again, overall, net income has declined, which is the important thing in every business. Net income is ultimately what matters. Net income over here, you can basically see potentially, this is for the first and second quarter of 2022 combined, is basically 50%, almost, more or less, approximately less than for the first and second quarter of 21, the year 2021. A little further, their cash has declined, cash and cash equivalent. Another red flag that I like looking at, and I've noticed in a lot of these companies, is inventories are piling up. This again, if you were to look at Walmart and their finances, their inventories are piling up. If you were to look at Target, their inventories are piling up. So they're having to mark down their products to sell them. And that is deflationary. That means the prices of all these products are going to come down because they have no buyers. Therefore, they're marking down the prices to try to get rid of their inventory. Another thing that I've spotted around the industry, inventories are piling up. They're increasing. That is not inflationary, that's deflationary, because they have to reduce the prices to then get rid of those inventories. So overall, you can see everything is basically declining over the time period. Total assets, total current assets declined from last year. Total assets declined from last year. Total current liabilities increased. You want liabilities to decrease and assets to increase, ideally. You don't want it the other way around. Again, total liabilities increased over the first 2 quarters of this year compared to the first 2 quarters of last year. Proceeds and see what else stood out to me here. Yeah, so cash and cash equivalents, which is basically whatever the company has that they can easily liquidate and turn into cash, or otherwise cash itself, has decreased over the first 2 quarters of this year compared to the first 2 quarters of last year. Non-GAAP again, no, this is GAAP profits, somewhat decrease. However, what has hammered the industry pretty bad is an increase in operating costs. Net income, again, you see here GAAP net income, because look how you can't pay attention to non-GAAP. It's basically BS. Look at the difference between non-GAAP net income to GAAP net income. This is like accounting magic. They make the numbers look bigger using accounting magic or whatever. So 50% decline in net income from last year, first and second quarter. And then again, free cash flow, 50%, approximately a little less than a 50% decline. That is not good for a company. That is not good for a company. And then, I mean, for the most part, everything else, they kind of give a forecast here, and their forecast is basically saying that gross margins will increase on the third quarter of this year, and that operating expenses will decrease in the third quarter of this year, potentially because I guess management is saying, oh, the holidays are coming in and everyone's going to want to buy phones and computers and etc. But the way things are going and the way interest rates are increasing, and if you look at consumer credit reports, people are highly indebted currently. They have a lot of credit card debt. So it might potentially be that people are going to cut back on spending this holiday season. And that's unknown yet. However, based off of what the company is currently projecting and their balance sheet, it's basically showing that the semiconductor industry, which is a boom and a bust cycle, right? I think is going into the bust cycle because their numbers are decreasing. They're making less money currently, and potentially this is going to get worse because interest rates are increasing. So potentially the next quarterly filing might be worse and continue thereon, which means lower share price, means the company is going to be losing money. So let me swap here really quick. Share. So I'm sure if you could see the charts here, but again, I just like looking at these things, the charts as like a reference of price action, not necessarily where prices are heading. However, you can see here that the major indices are pretty ugly. I mean, you can just look at them from all-time high back in January, and then it's basically been dumped. Some sharp rallies, dump. Again, like I was saying a few days ago, that I believe this rally was BS. Again, dump. Um, Let me see how much was that. That was a pretty brutal rally. That was a about almost a 20% rally on the S&P 500. That's pretty in like a month. That is a freaking insane rally. And if you compare to historical rallies, usually the most vicious rallies occur during a bear market when prices are declining. So I mean, you can just basically look here and you can kind of get an idea where potentially prices might be heading. Again, this is not fortune telling or nothing like that. It's just a reference of price action, because you got the major indices, you got the Dow Jones, S&P 500, NASDAQ, which is tech, and then small caps, the Russell 2000, which is basically, I would say, more of a broader view on the US economy, because it's all the small businesses, the startups, the growth companies, etc. Then if you go over here, the semiconductor ETF and the Korean index, which is basically their economy is basically highly dependent on the semiconductor industry, have a similar pattern to S&P 500 or the NASDAQ. So you can kind of get an idea that potentially the semiconductor industry is kind of forecasting or foreshadowing a potential slowdown in the economy. Again, why? Because semiconductors are in everything. If less semiconductors are being sold, less cars are being sold, less phones are being sold, less laptops are being sold, blah, 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 blah. You could keep on going. So yeah, with that being said, I just feel like the economy is definitely the global economy is definitely heading into a slowdown. And one of the indicators that I'm using to kind of get the idea that that is happening is viewing the semiconductor industry. So yeah, I just want to share that. And I mean, I guess let me know what you guys think. You think the economy is going up, the economy is going down? Business is booming, business is going to go bust. Let me know what you guys think. And all right, so I'll talk to you guys.